new data that's just come out from Startup Genome, which is a global company, suggests that around 40% of startups globally have only 3 months or fewer of runway. So if those numbers are right, it could mean a huge number of startups are about to go to the wall over the next quarter, unless they can raise capital, which of course in this environment is no mean feat. The US and Europe look to be a little bit weaker than Asia, but what about Australia? Well, Steve Torso is the founder and managing director of Wholesale Investor and joins us now. Steve, thanks for coming in. Good to see you. Look, just wanted to get your view on, you've seen these numbers. Just in terms specifically in Australia, what are you hearing and seeing on the ground in terms of, is there any capital out there? How are startups going? People are obviously having to raise in very, very trying circumstances.
Yeah, thanks, Kylie. There's definitely capital out there, and just to your point, David, I think this is the best time to kick off a startup. I know we kicked off ours during the GFC. Look, basically, there definitely is money there, and it's been highlighted. You'll see in a lot of the media, I'm sure you're seeing it through your own sort of publications as well. There's still transactions being completed. Now, the reality is a lot of those transactions were sort of started probably prior to Christmas or sort of just after. So all the media announcements we're seeing about transactions being completed are a lot of deals that have been done previously or been set up previously, and they're just coming to that fulfillment phase now. What the real thing interesting that this survey I think highlights is what is this going to look like in the next sort of 3 to 6 months. And it's interesting to see there is, with that investment capital still out there, the question is how will that money start to be invested? Will it become more aligned, or will they start to sort of pull the trigger? I think is what's sort of yet to be seen, but I think we'll start to get a picture of that over the next couple of months.
Because it is tough for startups in this market, isn't it? Many of them haven't been going a year, so they don't have any comparisons to get the refund on BAS statements going through. Many of them have small staff, so JobKeeper is going to be tough to get it. And when you go for this co-guaranteed business loan that the government has announced that the banks are meant to be flowing through, they're not going to look at startups because many of them don't have revenues or a balance sheet going forward. So you really got to fend for yourself and keep going and raising, don't you?
Correct. And the advice we're giving to companies is really simple. However it was 3 months ago, that world that they were operating in is now gone. And effectively, they've got to have 3 to 5 times the amount of conversations that they had previously. They've got to work a lot harder at it. And the reality is, it is definitely the startups that are sort of non-revenue producing startups that will have probably the hardest time. Companies that are in motion, at least they can show, at least they've got that potential to either pivot, to show new growth, or to show how they're sort of capitalizing on this sort of market. And they've really just basically got to demonstrate that to investors. But absolutely no doubt they've got to work harder than what they ever have previously.
Your business, Steve, you kind of sit in the middle of people with the money making the investments and the startups on the other side trying to get the money. Is this a really great opportunity for people who do have spare capital at the moment to get into the private capital market?
To be blunt, for some investors, this is the opportunity they've been waiting for the last 10 years. For investors especially that have gone to cash or that have recently sold out of businesses, effectively what they're going to see is companies now that let's going to be valuing themselves in the terms for investors more realistically. And also it gives them the opportunity to structure more interesting deals with the companies. So you'll find that the investors that have been sitting on the sidelines, they will look to be more active with companies which are strategically aligned to either how they've made their money or what business they're already currently in. And they'll look to be more active with those companies as they're actually making those investments. And the previous environment just didn't really sort of cater that because there was so much money going into businesses. There wasn't that sort of stronger negotiation potential, but it is absolutely a buyer's market at the moment.
And you'd imagine there'd be a lot of people who are already invested in startups. They're obviously going to be the ones that the startups go, knocking on their door first. So you imagine they're going to be able to get a bit more bang for their buck this time round.
Correct, and I think you'll see that the investors are going to be doing two things at the moment. One, they're going to be working with, let's call it their sort of problem children. So they're companies that are really been impacted by this current environment. And then the other part, they're going to be working with their other investee companies that have got the opportunity to shine off the back of this. Like you just featured a healthcare company. Like pure technology businesses will typically sort of shine in this type of environment. Healthcare businesses, as mentioned beforehand, and also any business which I suppose can utilize this market as an opportunity, the investors will start to become more closer aligned and look to assist them with either their capital raisings or look to invest further.
And a lot of the startups really are nimble enough to take advantage of this change in consumer behaviour in so many sectors when we come out the other side of this deep recession, isn't it? And just previously with Steve Wood, we were talking about Marley Spoon, a great startup not so long ago, now beautifully poised to take advantage of this whole home delivery of food and getting back into cooking. And they're the sort of companies you should be looking out for.
Absolutely. And I think you would have seen a few of these markets sort of in your time, David. And the reality is there's going to be winners and there's going to be losers. Out of this period of time, will become the star performers that investors will get the opportunity to reap those benefits over the next 5 to 10 years.
Yep.
And what's interesting is how does this change the investor's thesis on what they previously thought coming in? You know, there's obviously the businesses impacted, like Uber, obviously been a star performer beforehand. Obviously, WeWork's had its challenges, but before that had previously been a star. You know, that starts to help ask different questions to the marketplace about what will be the star over the next 10 years, and also it's changing our habits as businesses. You know, we're all working from home at the moment. Plenty of businesses are going, do you know what? This isn't actually so bad working from home. And that will then create other opportunities. And you're seeing that with the likes of Zoom and so forth, where their share prices just skyrocketed.
Yep.
Can I just ask Steve, one of the sad things about these numbers, it looks like about 3/4 of startups have had to terminate full-time employees.
Yeah.
What's that going to mean in 6-12 months when we're getting back to sort of full operations? Are those employees going to be available to come back? I mean, we've been talking about this war for talent, particularly in the tech space, at length. All these people get let go. How hard is it going to be to get them back?
The hard part with letting go team members is you're effectively losing IP, right? And companies only have a choice to either let go of team members or maybe even halt development of whatever tech projects they're working on. So either way, they're losing momentum. And the challenge with that for me that I see is that with these companies losing momentum is often that can impact their future valuation in which they can actually raise capital at. So yes, the concern is, can you potentially get that talent back? That is obviously a possibility. And do these type of environments sort of create more hunger amongst potential employees to sort of work harder or whatever it may be? Yes, that could be potentially the case. The shame, I think, is that the potential value destruction on some of these startups because they lose the momentum that they've been working hard for the last 1, 2, 3 years to actually build.
Yep.
All right. Steve, thank you. Great to see you.
Thanks, Kylie. Thanks, Dave.
Talk soon.